Let's take over.
Oh,
Hey.
all right. Thank you, Scott. Hello, Andy.
Hey, Steve. How's it going, buddy? Hey, Scott.
Good. All right. So I see the questions panel is working, which means you can see my screen and hear my voice. Thank you very much. Peter, I see a couple questions regarding to AI. We'll try and touch on a couple of those so you can get a visual answer when we get to that portion of the webinar. So yeah, everybody, boy, I was off yesterday and missed all the excitement to the upside, but another exciting day today, which we will jump right in. So welcome to the Trade of the Week webinar. We've got some content prepared for you guys today, and the market has also given us some content to play around with and discuss today as well. So I think we're going to be busy chatting away here at a lot of things. So let's get going. For those of you that recall, the first couple slides here is a staple of our presentation. The reminder, the disclaimers that we are not registered investment advisors. We're not brokers, so please don't construe anything in this webinar you see or hear as investment advice. We're content providers, software company, and Andy and I are going to talk about a few observations today. So they should not be construed as investment advice. If you need that, you got to go to the guys that took the fiduciary responsibility exams, and they charge you a little money too. You're not alone with trade ideas. Every week we remind people that the community is vibrant and the onboarding continues with people, and it's a 14-year-old product. It's got a lot of depth and features to it, and so we recognize that it's not something you come in and become an expert in overnight, and there's a bit of a learning curve. So we try to help with that learning curve with webinars such as today, but more importantly, the live trading room is a great place, which is free, by the way, is a great place to hang out and watch Barry Einerson moderate the room full of hundreds of people and trading his own account using the Trade Ideas technology at the same time. So there's a good community of traders in there, kind of pack hunting, looking at symbols in real time. I think there's definitely value when you consider it's a free room. And Barry can also take the time to help people with some questions here and there on the product. And then we have the 4 webinars, Monday, Tuesday, Wednesday, Thursday, which you're attending right now, basically on the topic of the day. Yesterday was Jamie going over the traders room. Yesterday was office hours with Jamie. Normally I was with him, but I was off yesterday in Zion's National Park. Kind of wish I was still there, but back to the grind it is. Wednesday, or today, is Trade of the Week. These are all 5 o'clock Eastern times. Tomorrow is the Q&A demo, which is a little bit more audience participation and hearing from Dan and Brad talking about what's coming down the road in new releases. And then Thursday, Andy takes over with the Trading Studio and puts together a content-laden presentation that is usually very timely with the day's action. And then lastly, the Friday support session, which I pleasantly just realized, we got a 3-day weekend coming up, guys. If you were not aware, Good Friday is always a market holiday. The market will be closed on Friday, so the support session for this Friday will not be here, but the following week, Friday support sessions, 11 to 2 p.m. Eastern, are a great place to come one, come all. And if you're a user, great. If you're not a user, even better. You can ask questions and we can demonstrate a lot of stuff for you live. Do we have, I guess we don't have that. We need to get a new slide in here that talks about Trade Ideas University. We used to have one-on-one training sessions, but with the advent and the growth of our subscriber base in a parabolic fashion, the one-on-ones were really no longer the highest and best use of anybody's time. So we went to a university, Trade Ideas University, for new subscribers. And they basically reset every Monday. Monday is basic, Tuesday is also basic, and then Wednesday we get into more intermediate, and Thursday is advanced. And again, those are taking the place of the one-on-ones, and so we're going to group training now, and it's been working out pretty well. If you have any questions on that, of course, email us info@trade-ideas.com, and they can point you in the right direction to get involved in that. So all of those things together, we've got a lot of support that we give in addition to the live chat. People come into our website every day and have problems with something, and one of us is there to help you guys. So we are always available to you. And because of that, obviously the subscriber growth continues to move higher up in this blue area here. Brokerage Plus is still a tool that's in beta that hopefully will get the bugs out of that and coming out soon. But again, this is for advanced and intermediate users. Newer traders and newbies to the market should really not focus on jumping right into auto trading. You really should kind of develop your own method and style and risk management, make your mistakes cheap, learn what it is you like to do and what you don't like to do, and then you could use our technology. If you had an account with Interactive Brokers, you could directly connect with them and have your own custom alerts, either fire trades or one-click type of trading. You can do that. Once that's out of beta, it'll be in the production version, and we'll move on probably to another trading platform. But for now, it's just limited to Interactive Brokers. Again, if you have more questions on that, info@trade-ideas.com, and we'll be able to help you on that. So let's get started. No man is better than a machine, and no machine is better than a man with a machine. Paul Tudor Jones, which is one of the probably one of the best, one of a small group of great living fund managers and traders right now. He's been able to adapt, unseemingly to pretty much any market since the 80s, and he's seen a lot. So that's a good way to put it, and that's why we continue to use this slide. The machine is trade ideas, and the human is us, the traders, working together with the machine. All right, so that brings us to our agenda for today. Well, market recap. I think we have a lot to talk about today. DCB stands for Dead Cat Bounce. We'll get into that. The Holly recap. Path of least resistance is the theme for the AI today. It's kind of a unique day. I'll let Andy expand on that. Trade of the week is and continues to be Barrick Gold, ABX. We'll talk about the thought process and the tools from Trade Ideas, which narrowed that one down, plus a bonus idea. So we'll save that for when I talk about that section. And then I think we'll finish up, the session today with a walk through the first 90 minutes of what the market was doing this morning. I took some screenshots. I've got some concepts and some things that I wanted to talk about, and so does Andy. And that'll make sense when we get to that point. And then, we always like to spend the last 5 minutes or so looking at a couple charts. So if you have a chart request, please hold off on that until we ask for it, and then we'll probably take the first 5 or 6 or so towards the end of the webinar. All right, so let's bring this guy down and go right into the market recap, starting with the SPY, which we usually do. You guys notice back here something in the bull market, the 10s above the 20, the 20s above the 50, the moving averages I'm referring to, especially right here. Well, I refer to that as the moving averages are all fanned out, and that's a beautiful look for a bull market. Well, look at the moving averages now. They're all crossing over. The 10 is now below the 20, and the 20 is now below the 50. And if they continue like this, they're going to fan out again, but not the way in which the bulls had it over here. It's going to be a flip side mirror image of what was happening technically on the way up. All of this mishmash and trying to determine what did we really have here. This gap down last week did not help. I looked at this area right here. This congestion is kind of one big giant bear flag, because it just kind of was creeping out onto the limb, and then a gap down from that. That's never good. Really, it's never really good. And now we've got these moving averages coming down and forcing the issue. The Qs actually showed what I talk about, price action bouncing back up into the pocket. Well, the Qs had a pretty big day today to the downside. We'll get into probably why that was so much more exaggerated than the other indexes. But the price gapped up and bounced pretty much right into the moving averages and didn't really have much upside movement at all. It was just sell from the open here in the Qs. And what I was alluding to a minute ago, if we look at our single stock window, the NASDAQ, the Qs were down 3.24%. That's big. And it did so on just under 2.0 relative volume. So we're back to the downside selling action on heavier volume. And one other thing of note, that just by a few pennies here, let's take a look at the low. The low of yesterday was, 159.16, and the close today was 159.08. So by about 8 cents, the Qs did what we call a bearish engulfing pattern, meaning the top of the body of today's wick is above yesterday's range, and the bottom of the body of the wick of today is below yesterday's range. So the entire range of red is covering up the high and the low of yesterday. For those that don't know, that's called a bearish engulfing pattern. That's one thing I definitely want to highlight on.
And Steve, well, yeah, I do, because look at our last one at the very top of the market in the Qs there. You had another. There's one right there. So just show you how important that can be. You know, that was pretty much whether it'll be the top, I don't know, but it's definitely the top so far. So
yeah. Another thing you've heard Andy and I talk about a lot recently is in down markets, in bear markets, in sellers markets, we have unbelievable bounces. You know, yesterday in the Dow, we had a 600-point bounce alone. And typically, those are some pretty strong bounces that usually don't occur in a bull market, but they occur as a knee-jerk reaction in a bear market. You get everybody, I'm not going to call this a bear market, let me back up.
Yep.
We're not quite there yet. But in a seller's tape,
a bearish tape.
In a seller's tape, a bearish tape, after 2 long days, 3 days of selling in an overbought condition, you know, we have what we call the dead cat bounce. And dead cat bounces can be fast and furious because what's happening here, guys? What's happening is everybody that's been conditioned to buy that dip just thinks, oh, this is just another dip to buy. Let's come in and buy it. And they buy it with both hands. And so some of your biggest rallies, to quote Andy, I've heard him say it many times, occur in bearish tapes, down market tapes. And that's what happened today. I want to do one more thing, guys, because normally I don't have the 200-day moving average on here, but there is definitely something going on that's worthwhile. Let me get rid of a couple of these just intraday tags that I wanted to be aware of. So I'm going to right-click and go to indicators, and we're going to add a 200-day SMA. Scroll down to the bottom here. Let's change the period from 20 to 200. And let's just give it a dark color since we don't have a dark color in there. Just go like that. Okay. And ta-da! Look at that. The last time the market bounced and found a level of support was just a hair under the 200-day moving average. Well, what did the market do 2 days ago, last Friday? Basically took it down. So going into the weekend, guys, we were basically resting just a hair below this 200-day moving average. And for whatever reason, of course, people want to attribute to it tariffs, free trade, you know, global trade, whatever. The market had a sense of relief over the weekend, gapped up, tried to sell off, but then had a really nice bounce up into the close, only to run into decline, not even close to the declining moving averages, but we couldn't even hold, you know, a doji day. You know, I kind of expected maybe a small, narrow range day. Usually after a big bounce, you get kind of a day of rest, as we call it, like, what the heck just happened? And then we kind of key off of that. But we didn't even stick around for a doji day today. We just turned around and just reversed right back down. So I usually don't use a 200-day, but now it might be, you know, something to start to look at because the S&Ps hit that pretty hard. I think the Russell 2000 also were, well, they were flirting with it back there, but they still have some work to do there. So on these averages that haven't gotten back to their 200-day moving average, there may be a little meat on that bone left underneath it, especially in the Qs. I mean, the Qs were leading us higher just 2 weeks ago, but now they're leading us lower. And why is that, Andy?
Well, Facebook probably has a lot to do with it.
Yeah. The weightings, I did a tweet last week.
Exactly.
I did a tweet last week that said, you know, heavy weightings in certain sectors can cut both ways. You can get a nice market going higher on Facebook and Google and Amazon, but when they turn and the market's still heavily weighted towards Facebook and ugly and Google and Amazon, well, you know, that's going to show up in the Qs. So that's why the Qs were down much more today than everything else. 3.2% on almost 2 times normal volume. And again, I believe that bearish engulfing pattern is going to spook a few people. Back to the SPYs, 200-day moving average is coming into play. So that may come into play in the Dow. We got close to it last Friday, but not really there. So there may be a downside bogey in the form of the 200-day moving average for some of these other indexes. If the Qs let us up, it's very possible they could lead us back down if things don't change. What else was I going to talk about? We got the bearish engulfing candle in there. We got the 200-day moving average as it relates to the S&P 500 kind of clockwork. And again, S&P 500 is the standard benchmark that, you know, pretty much most funds key off of. So that's kind of interesting to see how that came into play. Let's watch that level in the S&P 500s. If tomorrow we start to trade below the 200-day moving average, there could be some follow-through that the bulls don't want to see or don't want to talk about. All right, so other than that, it was just ugly across the board. I mean, that was a very quick dead cat bounce. Sometimes dead cat bounces, like I said, can take 2 or 3 days. But this one was a quick turnaround. All right, anything else you want to add, Andy, before we move on?
Man, you covered it pretty good. I will say, go back to the spiders. Just now you got, like Steve was saying, these averages fanning out. They're all rolling over. Which last time you really didn't have the 50. Now you have the 50 rolling over. The last time we took a dive down, the 50 was trying to straighten out, but now it's actually rolling over with the other one. So, yeah, it's
if it continues.
Go ahead.
I call it the other side of the mountain. Everything's great here, and all of a sudden you get to the other side of the mountain, and everything's turning over and reversing. Again, like I started off with, the moving averages are fanning out accordingly, which could signal momentum if things don't shape up to the downside. We shall see. But I'm going to be watching closely for a close below the 200 moving average in the S&P 500, and I think that is going to probably set off a lot of alarm bells. If you think about the simplicity of the 200-day moving average, a lot of institutions that focus most of their stock selection and portfolio analysis, they do it in the rearview mirror, meaning fundamental analysis, right, Andy? But every now and then they try and keep it real simple, and they may have some indicators that say, oh boy, the stock that we're in is now under the 200-day moving average, and that might be something that they start talking about. If the institutions start talking about, hey, we're now back under the 200-day moving average, that could start to spell, some future sentiment, coming down the pike. We'll see. All right.
And to add to that point, Steve, years ago, probably back when Steve and I first traded, there wasn't most of your institution, your fund managers, it was all fundamentally, based. And but now they've had to accept technical analysis because you have so much algorithmic trading in the market. And of course, that is done with primarily technicals. So they have to pay attention to it now because a lot of it is driven by the algos out there.
This market, the last, except for yesterday, but the last 2 weeks, kind of reminds me of where I was on Sunday at Zion's National Park at the top of this cliff. On the left side is a 14-foot drop, and on the right side is a 14-foot drop, and there's a chain in the middle that everybody is holding on to with dear life as everybody's human preservation instincts kick in. And I just we laughed about it before we came on air, but sure, feels like the price action is holding on to the Angels Landing, Zion's National Park chain here for dear life. All right, where to next? Holly. Well, usually I do a couple of observations on the macro level of Holly, and then I'll kick it over to Andy to kind of take a deeper dive. But coming in today, what I noticed was interesting. We had 2-to-1 longs versus shorts. We had 8 long strategies ready to jump into the game if the coach, Holly, put them in, and only 4 shorts. But when it came down to crunch time, the first 3 trades of the day, let me sort this. It's sorted by, we'll get to this, Andy will get to this. Notice if we're sorting by profits here, well, we've got a pretty good directional bias that we'll talk about. But if we sort by entry time, all right, the first 3 trades of the day, well, we could even take it further. The first 4 out of 5 trades, the first 5 out of 6 trades today in the first 2 hours were short-sighted. But the first 3 coming out are something I'm going to talk about in the next segment. We'll talk about that. But the first thing I always look at is trade selection, the trade directional bias, and the frequency. Well, we didn't have a whole lot of trades after an hour and a half triggered by the AI Holly. So we had, very selective AI. It wasn't really going crazy in the first hour and a half, but when it did come out, they came out short. Even though, and I don't want to tread on the next topic we have, but even though the market was up, in the first hour of the day, barely hanging on to unchanged levels, Holly wanted none of it. The only statistical probabilities that the AI was seeing were short sells, and I found that to be interesting. So we had an early directional bias going on there. I'm going to save the rest of the stuff I have for the other segment. So what sticks out to you here today on Holly, Andy?
Okay. Yeah, just go ahead and short. Just short by risk off for now.
Sort by risk off.
Yeah. I just want because there's a couple of trades like that. That LE that was actually a pretty decent trade. Pretty good entry anyway. She kind of there was a trade similar to this about a week ago where, and I don't usually condone picking tops like that, but if you're going to do it, Holly is showing you the right way to do it, okay? She didn't just jump in front of the momentum on the 15-minute chart right there. You could see it played out, and then when it broke that level, that little range there to the downside, that's where she took her short position. That was kind of a timely trade, but and once again, if you're shorting a daily like that, you don't want to stick around, if it does start to go against you. And Holly was wise. She used she used timed exit on that, so that one worked out pretty good for a 52-cent gain. A couple of beautiful trades at BHVN. This was a downward dog, and focusing in once again on that 15 minutes. This is what we call a no pain trade. Okay, once again the stock was actually up on the day, but once it kind of broke through that I guess it's support that Steve kind of drew there on the.
Actually, I was just drawing the entry.
Yeah, but you know what? Look at it. It marries up to the intraday support. Yeah, so great trade, no pain. She got in it and wrote it out for a nice target hit. Anytime you see target hit, that's a good symbol. Anytime you make a buck, on a trade, we used to call that. What do we call that, Steve? Back in the day, when you a stick, you got a stick out of it. Yeah, it's what we used to say. You got a stick out of it, So
1 point.
$1. $1 is a stick.
Yep.
Let's go to Roku. Another very good trade, a downward dog short. And look at that entry, and once again, no pain. There were a few others. I know we have a lot of material to cover today, so I don't want to just go through here, but I was really impressed with Holly. You look at the amount of shorts that she spit out today versus the longs. Was great. I do want to point out one for you guys to keep an eye on, okay? Holly called it out this morning, and it's GE. I don't usually recommend doing any bottom fishing, but keep your eye on this one. Look at the relative volume today, almost 2.5 times normal volume, okay? I didn't look to see if there's any news. I don't care because I, like to trade price action, and, this is one that I think you should keep an eye on because what I like about these is if it is a reversal, it's a very low risk trade because you just use a low two days ago, which is a 52-week low, and geez, probably a multi-year low. Obviously, it is a multi-year low. So one, you might want to keep your eye out for a potential reversal. So it still has a lot of work to do. You can see it ran right into its 10 moving average there and finally backed off today on the daily.
Mm-hmm.
So, but keep your eye on that because I always like when a reversal is done with volume, and you can see that it's almost twice as much volume as the day before, and
with the relative strength of what was going on in the market.
Yes, look at what the market was doing, and
as the market was doing that, what was GE doing?
Absolutely, that's what you call relative strength. That was my next point to get to, Steve.
Sorry.
No, that's fine. But other than that, just an overall good day. I mean,
I think another thing that kind of we wanted to talk about was this is one of the first days we've seen risk on, where the majority of the trades, if we go to risk on and sort here, what do we got? Mostly shorts. So the path of least resistance today, the theme was to go short, regardless of what the spiders were trying to do midday or early in the first third of the day. Holly was having none of it. It was a lot of short biases continued to come out, and then when you have the market actually bleed off at the end of the day, well, we all know, or in case you don't know, risk on means what would happen if the trade was carried long or short into the bell. And so a trade that actually hit a dollar target that we just mentioned actually went lower. It went a lot lower at one point, finished up right about here, but there was some nice residual. And so Holly was flashing risk on mode was the mode to be in today, but that doesn't mean risk on, stay in your longs. It means you have to kind of look at the thing and say, oh, wow, the majority of Holly's trades are short and risk on is better than risk off. So that would lead me to believe that holding on to shorts going into the close whether they're on this board or my own, decisions or your guys' own trades, that risk on, risk off flag kind of helps people stay in the game if things are working in the right direction. That means today, if you were holding on to shorts, trying to stay on to them, well, the risk on was basically telling you that that was the path of least resistance. The majority of trades were short, and they were working even better into the close, because risk on had a total of $3.61 on one share of stock if you aggregate all of these prices, versus getting out when Holly got out, it was about half, $1.85. So, winners on both accounts, but the risk on flag should help people. And on a day when Holly's all long and the market's going up, then of course we're talking risk on means staying in your longs. But with the short bias working and risk on, we have to use our thinking caps and realize that risk on actually means today, with the balance of the short positions working, that's really the path of least resistance.
Mm-hmm. And one other thing, guys, I can't tell you how it will help you. If you're accustomed to just going long, looking for bounces, and always just feel yourself going long and being wrong, because if we do get in a bear tape for a while, it could be very painful and cost you a lot of losses could add up. Keep an eye on Holly, because remember, Holly's unemotional. Okay, she does not favor her forward hand. She's like Roger Federer. She has a great backhand too. So just keep an eye on that, because I'm telling you, it can help you. You can see what direction she's leaning to. You can see the amount of shorts she's putting on versus the longs today. So definitely keep that use it to your advantage, not so much as to find great trades, which you can do, but also as a barometer. Okay. It's a good market barometer.
It's a good market barometer. What's happening today? Well, shorts, the path to least resistance. So if I'm going to sit here and try and buy dips all day, and at the end of the day, if I've lost money and scratch my head, well, something could be learned from that. All right, let's move on to the trade of the week, which is ABX. So you guys recall that this is what the market looked like with this giant red candle before. Let's see if I can. Yeah, there we go. This is what we had to work with on Friday going into the weekend to select trade of the week. Were we going to bust through that 200 and continue to slide down on, trade tariff fears, or is technical is going to jump in and give us a bounce? Well, either way, we wanted to call something defensive. And gold kind of comes to mind in terms of defensiveness. I'll let you know that I saw a couple of good traders that I know talk about they were warming up to the gold miners last week, late in the week, kind of made a mental note of that. But then when we got time to do the trade of the week, here's my copy right here. Andy pointed out, I told him I'd like the way ABX was looking. He goes, that thing was the only thing that came through my let's go fishing alert today. So that was kind of an omen, that the only thing that came through. And the let's go fishing alert is looking for stocks, ABX, that have been downtrodden, which is this one, but are turning to break, kind of like the trend change lubricant, but the trend change lubricant scan focuses on a short squeeze. I don't think we really want to play with the short sellers right now. These seem to have probably a bit of courage behind them. But the let's go fishing is very similar. However, the main factor in that one is the fact that these are stocks that are very solid fundamentally. Let's take a look here at ABX. Revenue, $8 billion. They got $2 billion in cash and only $6 billion in debt. So the cash to debt ratio is good. They're making money. EPS, $1.23. They're earning money. This is not some, shady low float stock that's on the come, not making money, but promises to. No, this is a solid fundamental. And so that's the reasoning behind Let's Go Fishing that Andy created. He gets all the credit for coming up with that one, trying to find stocks that are breaking a trend and hoping that, as we talked about earlier, the market institutions, they primarily focus on the fundamental stuff. They're not too adept at reading charts and playing things technically. So, if they see a rotation opportunity to come in where maybe the gold miners have been beat up pretty badly, a single name within the gold miners was ABX. And it's got solid fundamentals, and so that was really the reason we chose it. For now, the mandate is we need to pick longs. I'm going to maybe lobby for that if the market doesn't shape up here anytime soon, and we might start maybe even picking shorts in the future. But for now, we're only choosing longs or go to cash, or maybe an occasional invert ETF like SDS. But now let's dive into this technically. We actually got an email today from somebody who said, hey, I don't know, what should I do with this ABX? Should I sell it? Well, you can do whatever you want. We're not going to tell you what to do, but when you're swing trading, we've basically defined our downside risk, which in this case I believe is right about here, 11.99, and our upside target is right around just above 14. So one of the worst things that happens, and where's our trigger point? Our trigger point was basically right here. So I'll draw those lines for you. Easy, risk 1 to make 2. Here's our risk margin, and then here's our profit margin up here. So we're risking this to make that. Well, in swing trading, what you don't want to do is try and talk yourself out of a trade. Sure, today was a down day in the stocks, but let me pose this question to you guys. What happens tonight if people come home and they go, oh my God, that bounce yesterday meant nothing? Forget it. Sell orders going in, sell orders going in, and the futures kind of maybe dip down a little bit overnight. Well, what if gold really rallies this evening? Well, when we come in tomorrow, there's a possibility, if that's the scenario, that the rotation for people who need to buy stocks and institutions that need to buy stocks, they may rotate into gold miners. And everything technically here is still very much intact. I mean, it's just a couple cents under our trigger point, no harm, no foul. Here's the 10-period moving average. It kind of held the price on the last few bars back here. I would not get nervous about this trade until if it rolled back over and closed below this moving average right here. So we're still in no man's land today. I don't fault people for just saying, I'm going to get out. That's what Holly's doing when she says reduce risk. She's saying, the trade's not working like I thought. I'm going to get out rather than wait for a stop out. So if you want to go reduce risk on these things, that's fine. But the reason we do swing trades is to allow things to develop. What was out of favor today very well could come into favor tomorrow, as I suggested. If the gold gets strong overnight, well, a big if, I'm just saying if, tomorrow coming in, there could be a rotation into the GDX and the GDXJ, the gold miners, and I would welcome that. So the trade of the week hopefully would work better to the long side. But right now, there's really no reason to fret. I mean, it was a bad day, it was a down day in the market, but ABX is still pretty much intact here. This level is interesting. I'll just move this line up from the stop to that level. If somebody was really skittish about the market going lower, and if the gold miners didn't kick into gear, well, you can see these 4 candles here were basically held up. So this level of prior resistance, which we blew through, should act as support. And maybe it'll tickle it on the open or whatever. But if we get a close below this level, well, it's going to correspond to what I just said. It's going to close below that moving average as well. So, I'd say for those that are in this and really nervous about it, maybe 1235, a close below 1235 is where you might want to let that go. But it's up to you. It's just a suggestion. Now, anything else you want to add about it?
Yeah, this just came to my mind because I remember this happening, and if you go back and look on a longer term chart, go back to 2016, we're probably not going to be able to do it on ours, but if you do, you see how gold was in the doldrums down there in 2016. I don't know if you're there yet, Steve. I think you may be. See down at the bottom, right in the middle there.
Let's do this, Andy.
Okay, thank you. Thank you.
Okay, let's actually go to a weekly chart. All right.
Okay. Well, yeah, the point I'm going to make is down in 2016, so you see where they really just took off there?
Is this what you're talking about here in gold? I'm sorry.
Well, let's see here. Well, what I'm saying is gold, GDX was way underperforming gold.
Oh, the gold miners.
And gold took up. So now you had GDX, and it just took off just really, you can just see it rip there. In 2016, probably, nope, you're getting close to 17. There you go. Look at that rip right there. Okay. And what the point I was going to make is I remember because I was trying to play them then, and I noticed it was really just really kind of lagging the GLD, and I'm not even sure if GLD was pull up GLD again.
Yeah, it had its moments, and then it kind of same period right here, and then it chopped the commodity chopped sideways for a while, and then had a secondary move.
Right. But I think if I remember correctly, yeah, I just remember it took forever for GDX to get going. Anyway, the point I'm making is don't be surprised if you see a sudden move with GDX. Go to the current value of GDX now.
I'll go back to a daily chart, okay?
There you go, yeah. And now take a look at GLD.
Uh-huh.
So really, it's really lagging it. Don't be surprised if you get another move in GLD if the GDX just doesn't just kick into gear, because it's very strange to see that big of a disparity between the two.
Yeah, there could be a little catch-up having to be played. So that was the genesis. A weak market, we needed to call something defensive, and it showed up on the Let's Go Fishing scan, and it was the only symbol that came through the entire day. So we went ahead and called that as a long. Now, for those that actually read through the entire trade of the week, I try to give the chart, try to give the scan. Did anybody catch this? I mean, I'm not supposed to be calling short ideas, but I saw something that I just could not keep to myself. And the special bonus idea for those that like to go short, consider going short Twitter. I did not give you an entry, and look for a filling of the gap around 25.76. So I basically kind of gave, a target. Well, if we look at Twitter on our trade ideas charts here, if I could spell it right, you'll notice that coming into today, we had our smart stop. This is our swing stop, our smart stop, basically saying if you're long Twitter up here, you're probably not going to want to be long if it breaks this red line. And that was drawn before today. And I was looking at this on Friday saying, boy, if we go down again next week, this thing is just salivating. Considering Facebook and everything else the other social medias are going through right now, this thing has been holding up. One slip on a banana peel and this thing's going to want to fill the gap. It just about almost did it today. Yesterday was a different story, but what I want to highlight, you guys, I didn't give an entry point. We got to put, teach a man to fish, give a man to fish, feed him for a day, teach him to fish, feed him for life. These lines, these swing exits are there for a reason. Well, it's a swing exit for a long, but we could flip that around and call that a short entry. A swing exit long could be just as good as a short entry, you get what I'm saying, right, Andy?
Sure.
Making sense? Yeah. So that trade idea's line in the sand really was the trigger today for those that were paying attention. And again, just a really nice drop into the gap. Would not be surprised to see this thing fill the gap. I believe it's around 27, 26, maybe tomorrow. That could happen right on the open, and you might see some bounce. But it's probably a foregone conclusion that thing wants to fill the gap. And hopefully somebody was paying attention and maybe got that idea and took advantage of it. We'll never know. That's your secret. All right. Anything else we want to add on the trade of the week section here, Andy?
No. I mean, it's a bearish tape. I'd look through a couple of them today. Obviously, I mean, it's obvious when you get into a tape like this, and you got some longs in there.
This is worth noting.
Roll over with the market, but.
My 10-period moving average is my single, only one indicator that I use on my intraday charts. And when something is in momentum, the moving average, I call the momentum line, is going to keep it in that direction. And you can see it tried really hard to break above it, but it couldn't. Sellers grabbed it, started selling some more right at that downward moving average. So it's a 15-minute chart. It's my favorite. It's been that way for years, the 10-period SMA. If something is moving up in momentum fashion, that line is going to support it until it doesn't. If something's going down with momentum, that line is going to suppress it. Any bounce it tries to have, it's going to get suppressed until it doesn't work. So this is a good rule of thumb, a good way to gauge a momentum stock. Should I get out, or should I wait for it to actually bounce and cross above that declining 10-day? And the same could be said, I forgot which one it was earlier. There was one that was working pretty nicely earlier. No, I lost it, but that would have been an upside example. All right, so Twitter, if anybody's short Twitter, maybe get ready to cover some right on the open tomorrow. I just got a feeling it's going to tag that gap on the open tomorrow, and that trade idea would be complete. All right.
David, yes, I see your remark about Twitter. Go ahead, Steve.
Well, David, that was anticipatory all along. I mean, let me go back. I didn't know if somebody was going to come out and say anything, but I'm glad they did because it needed to be said. I'm going to try and just design, let's see if I can just, I can't get enough out of there. But, last Friday, I didn't have the green candle bounce yesterday, and we didn't have the red candle today. What we had was a boom, kind of a bounce, and then it was trading back down. The price of Twitter was knocking on, remember that old game we used to play as kids called Don't Break the Ice? You'd have those little white tiles. You'd each have a turn and taking a hammer, you'd have to hit it. And if you broke it, it was, well, when I see price action doing that, bouncing off support and then coming back and testing it, it's looking for a crack in the ice. Well, yesterday Twitter had a good day because the market had a good day. But back to reality, in price action land, once it broke the ice, it was off to the races. And yes, you're correct, David. The Citron midday call certainly didn't help the bulls hold on to Twitter today. So, I kind of expected that somebody might maybe see that. It was getting weak. It was setting up. Again, I don't like to take any analyst's advice. I never listen to analysts. The only analysts I listen to are the footprints in the sand of what the herd is doing. And the herd told me that after that slight bounce here, it came back down to retest that level, and it was probably going to start digging on it. And when you put Facebook into the mix and see what Facebook's been dealing with lately, well, Twitter might not be far behind in terms of sentiment. All right, well, that should probably wrap up the trade of the week. Definitely wanted to touch on that little nugget that was in their Twitter. And again, if the market doesn't turn around and shape up, I don't want to have to, or Andy and I together don't want to have to be playing tennis with just a forehand. And that's an analogy, guys. If we're only going to try and call long stocks in a market that's going down, that's like trying to play tennis with only a forehand and never using your backhand. So I'm going to lobby and talk, and there may be a point in time where we come to another week where there's just no defensive longs. We may call a short. I don't know, but we're not going to try and make a habit of that because we're aware shorting's a different animal. Not everybody can do it. You might be trading out of your IRA account. Maybe you're not comfortable doing it, but I'll be darned, we're not going to call something just for the sake of trying to have something to call if there's some good-looking short setups out there. Mm-hmm. All right, so now is where I want to kind of walk back through the day here. This last, second to last, a walk through the first 90 minutes. All right, it's easy for me to sit here in hindsight and say, I'm not surprised we had this kind of day today. I mean, I'm actually surprised it was as weak as it was, but I'm not surprised that we finished weak. Why? Well, there's a few things that we need to go over. Oh shoot, I don't have them loaded up, so let me load them up here real quick. A couple of screenshots that I took. Here's the first one, and here's the second one. We'll come back to that, and then also Jamie will come back to that. So right about 20 minutes after the open, I've talked about recently, maybe some of you heard me, I took a compare account window, which is basically comparing highs and lows. If you launch a compare account window from Trade Ideas, you go new, compare account window, it's going to immediately start measuring the highs versus the lows. Well, the market's closed right now, so it's 50-50, nothing's happening. But what I did is you saw that there's a configuration panel in there. So I can basically take the compare count, and I took this multi-strategy, the up version of the multi-extreme, extreme volume, high-low pro. These are all of the stocks that are doing high volume and high momentum, your Momo stocks, if you will. Greens are going up and the yellows are going down. So I assigned my compare count window to monitor how many of these extreme volume, high-low pros are going up versus how many are going down. And this is what I had at about 20 minutes after the open. Let's just take a look at the SPY here. So I mean, right about here, basically the second candle, probably right about here, that green candle. We gapped up, came down, and then went back positive. So we were actually positive just by a hair when I took this screenshot. So one of the things that's very valuable about Trade Ideas is seeing what's happening under the scene of the indexes or the big stocks. Well, in terms of the momentum stocks with volume, it was a 60-40 split to the downside. All right, so underpinnings of the market definitely weak in that first 20-minute snapshot as the market was trying to hold on positive. And then again, the second one I did about an hour later, and it got even worse. We went to 66 going red. This is not a bullish reading for stocks with high volume making momentum moves today. So you got the spiders and the Qs telling us one thing, and you've got the internals telling us another. I found that interesting, and it definitely put up a caution flag. And then those of you that know Jamie, 20 minutes after the open, he likes to look at the entire market across all different market caps. Here's your small caps, and here's your large caps. Well, 71% reading there, 70 there, mid cap 64, small to mid, and then the small across the board. After 20 minutes on the open, again, when the market turned green and was trying to go back up, the internals were telling us be careful on the long side. So that was one thing of interest that really caught my eye coming into the first hour, half an hour trade of today. Another thing, we'll just rehash it. What did I tell you earlier? The first few trades of the day today, Even though the market was trying to go positive, Holly said, I don't want any of that. All I see is statistical probability going short. So the directional bias was conflicting with what the Qs and the spiders were telling us. Let me show you one more thing that I found interesting about the bias that I think was underpinning, and Andy's talked about this a lot. The VIX should be down when the market is up. Well, the VIX never went negative. You know, there's the negative line right there. The VIX started the day positive and stayed positive the whole day. Mind you, midday here, when the S&Ps, you know, held that average and started looking like, hey, we're going to actually move higher here, the VIX was having none of it. People were continuing to buy insurance, as they call it, you know, premium insurance on stocks going down as a hedge against their portfolio. So those three things, you know, those compare count windows just lighting up red, biased. Holly was short biased. As the market went positive, the VIX wanted nothing to do with going negative. So those are some real interesting, you know, counterintuitive tips that I wanted to bring to your attention that, you know, Andy and I and Jamie and Sean and Michael and everybody were kind of chatting about today in the first hour. So I guess that's all I had to say about that.
Yeah, well, those are very good observations, and yes, I agree with you on all of them. I mean,
compare.
I kind of saw the same thing, yeah.
Yeah, it's called compare count. I'd be happy to share it since I've already configured it for you guys. There's no point in making you guys build it. So this one right here, extreme volume, high-low pro. This was running till the end of the day. Here's a little trick. When you leave your desktop, and I had to do a few demonstrations today, so I had to go to a channel. When you leave and come back, your compare count window's reset. And so that's why I really don't like to go to a channel. I like to let them marinate. But basically, this is the remaining 4 hours of the day. It was just a bloodbath, everything going to lows in terms of momentum. So this is the compare count window. I'm sorry, this is the multi-strategy window for Stream Volume High-Low Pro. Stocks going up are in green. The stocks going down are in yellow. And the compare count window basically keeps track of who's winning the fight. So as requested, everything is shareable here. Save and share, copy all. I'm going to send that back to my minimization. And true, I don't like, Waleed brings up a great point. If I pin this window, if I were to go and say, hey, pin that extreme volume window, that window is going to stay. But the problem is, Waleed, when I come back to my default layout, it creates a second, a duplicate over the top of it. And before you know it, people come into us all the time and say, I've got way too many windows open. What's happening? And well, if you're not aware of having a pinned window, every time you reload your default layout, it's going to make a new copy. And so I try to steer people away from using the pinned window. But you're right. If, in that case, if I was dead set on letting that compare count window continue to marinate, I could have pinned it. I just would have to remember to unpin it next time. But that's a good point. Thank you for bringing that up, Wally. So I see the few questions above you is, can you please share this indicator? How do you build that? It's called, Adam, it's called a compare count window. You're comparing two items and then counting, you know, the score of that. So you saw that I did copy and save all. Let me go to the chat window here. You guys in the GoToWebinar chat window, CC Extreme High-Low Pro is the title, and I'm pasting it. So I just put it into the chat window, and I'll take it a step further. For those that want to grab it now while it's in the chat window, first expand that window, and then if you click on the link, it's going to take you to this page here, okay? Load from cloud, all right, extreme volume versus extreme short. That's what we got. So from clicking that link and going to this landing page, all you guys got to do is highlight the URL above, copy that, and you're halfway home. Go to your toolbar, file, load from cloud, and there it is. It's already populated. I'll click load, and ta-da, it's all set and ready to go tomorrow. If you guys do that, the next step, please, and Barry does this all the time in the room, he hands out stuff. People take it, and then they close their program, and it's gone. The next step is, guys, if you take that, please save to your own cloud by just going save to cloud, and then you'll always have a copy of that. I'm going to minimize that back down. All right, we got time for just a few charts. So if you've been sitting on a chart request, we'll take a look at a couple for you. We got a few minutes here. Always helps to know if you're long or short, or thinking about long, thinking about short. It always helps to know. All right, so AMAT is the first one. Well, engulfing, bearish engulfing, not very good for the bulls, Mark, on AMAT. Yes, that was you. So thoughts on AMAT was, the semiconductors, SMH in general, they all look alike. NVIDIA took an absolute beating today. I mean, look at that. You want to see an engulf? You could fit 2 engulfing patterns in there. My God, that's hideous. So the semiconductor looks pretty hideous. The whole sector does. AMAT is obviously a part of that. And, that's a really ugly candle today. The swing stop you can see is basically today's low. Actually, it took out the swing stop at the end. That swing stop will adjust overnight. So this red line is basically what we saw coming into today. This thing came all the way down to that. There's not going to be a lot of good-looking charts out there.
Check out SMHs again. I think it looks the same as far as the swing stop toes too, doesn't it? Yep.
Of course. Oh yeah. There it looks exactly like, and then
very kind of like what you saw in Twitter. If that one, you might want to keep an eye on those SMHs if they do break that that level there.
Let's go back and see what you're talking about. Okay, what he's talking about is the actual smart stop. The swing stop is just below the SMHs. So, the SMHs as a whole, if we take that out tomorrow, the AMATs and the NVIDIAs, all of them, they're going to get probably taken down with it. So it's not a great looking chart. If you're not afraid to short, it could be a possible shorting opportunity if you see that SMHs break. It would be nice to see the general sector break down. For some further confirmation, but there's these 2 spots back here as well, support. So the SMHs, if they break down through there, there's going to be some damage. All right, do you still like the XPO chart? Oh, the way you phrased that, I don't know. Well, let me go back to what I said a minute ago. I don't know if there's a lot of bullish charts out there that I like at all after today. Again, this one got taken down with the crowd. The moving average is starting to roll over the 10 period. We could not even get above that today. XPO is not really looking that great either. I mean, there's just not a lot that I like to look at that I'm excited about right now. I haven't had a whole lot of time to take a look. Treasuries obviously had a good day because why? People selling stocks and buying bonds. So the flight to quality today lifted the Treasuries for sure. But other than that, we've got a completely red sector board across the board today. And I don't see a whole lot of bullish charts out there that I like. Last one is Amazon. So he snuck it in there. We'll be happy to do Amazon and then give it back to Scott. Looks like every other chart. It's really hard to get excited about bearish engulfing patterns. But notice the swing stop down here. The Trade Ideas logic is looking at that low right there. It's looking at those lows here, that high there, and that high there. So it's a pivot level. And you could try it if the market wants to hang on and bounce tomorrow. That 50-day moving average is right there. Maybe if you're really itching to go long, you could let it come down, and if it does touch these levels, you could consider going long with maybe a half starter position, but have a very tight stop and keep an eye on the market. There's just not a lot of good looking charts out there after all of these bearish engulfing candles we're seeing across the board. I don't really know where to steer people at the moment. Thank God I don't have to. We'll see what the rest of the week finishes up. But with that said, thanks for all your comments. That's all we've got for you today. Let's bring in Scott, and he can talk about some promotions coming up and some other things. Scott, let me get you the right page.
All right. Thank you. Yeah, make sure, first of all, everyone is aware of our podcast and subscribed. We have a new one up last Friday. We're skipping this Friday because of the holiday, but then we'll be on following that. You can listen to the newest several podcasts by searching for Trade Ideas Podcast in whatever application you listen to podcasts in, and then adding us as a subscription. Just download those last episodes and hear the wisdom. There's some new information about what's coming up for the Trade Ideas AI in the most recent podcast, so check it out. There's a nice ebook out. It's very timely for what's going on in the market today. Steve and Andy both contributed to this, so go ahead and do yourselves a favor and download it. It's free. Just go to trade-ideas.com/ebook. That'll take you to the page. Just pop in your email and you'll get the download sent to you. It's really good. It's a quick little read, but keep those strategies in your toolbox. They will be important moving forward this year. And we also have a code. Use the code Lucky Holly, all caps, just like on the screen, and it'll save you 15% on your first month or year of trade ideas. Subscribers can also use this code to upgrade and save the same amount off your first installment of your new plan on the upgrade. So you can just click on log in on the Trade Ideas homepage, change your account, and go ahead and do that. New signups can just use that on checkout, save 15% on the first month or year. It's really an advantage on the first year. Thanks, everyone. You can find a replay of this webinar in your email later on tonight or tomorrow morning. You can email us info@trade-ideas.com with any of your questions. Reach out to Steve or Andy directly, Steve at or Andy at for their emails. Steve's Today Trader on Twitter, Dan Merkin's Trade Ideas 1. When you find us on Facebook, we're facebook.com/TradeIdeasPro is the direct location of our page. And when you like our page, you'll see our posts, and then you can share those posts with all your friends. Makes us happy. All right. Thanks, everyone. We'll have the recording up later on tonight or tomorrow. Thank you, Steve. Thank you, Andy.
Thank you.
Yes.
See you guys on the next time.
See you Thursday.
Later, everyone.
Bye-bye.